Dámy a pánové, ještě jednou děkujeme panu guvernérovi a nyní bude následovat první panel, který bude moderován Zdeňkem Tůmou a kde máme velmi privilegované hosty, kteří představují mateřské společnosti. Ladies and gentlemen, thank you once again to the governor, and now we will proceed to the first panel. Under the kind guidance of Zdeněk Tůma, we will have representatives of parent companies discussing the issues of their choice. Zdeněk. So, colleagues, would you like please to join us? And on your way up, I will just check whether you have microphones, all of you. Yes, you do. So, welcome again, and Zdeněk, it's up to you now. You don't have a microphone?
Is on. Yeah, okay, great. Thank you very much. Good morning, ladies and gentlemen. Let me say on behalf of panelists that we appreciate this invitation, and Mr. Kavanek, the president of Czech Banking Association, invited us for potluck. I don't know how to translate potluck into English, probably a chat, so that we were invited to chat here. And primarily with the audience, and that's why it's organized in this way. So I would invite gradually our distinguished panelists to have brief introductory remarks, just 5, 6, 7 minutes, and we would be looking forward to your questions. Obviously, we don't have so much time, 60, 70 minutes, so that there's so many questions we can cover. That it's almost impossible to speak about the 20 years history, but also about the future and about the present state of the banking sector in this region. Obviously, and it was obvious from the previous presentations, a lot has happened in the last 20 years. It was reminded that 20 years ago, this was undercapitalized banking sector. Obviously, it wasn't managed well. There was emerging regulation at that time, and we went through our own crisis at the end of the 90s, which was obviously quite painful. But today, and it was also clear from the previous presentation, the Czech banking sector was doing very well during the crisis. At the same time, the crisis showed that there are many challenges for the future, and it regards the regulation, and you certainly remember the discussion which continues, the discussion about whether the more safety in the banking sector can be brought about by better or smarter regulation, or whether there are some other factors. Obviously, never we can have the ideal and waterproof regulation. Always it will depend on the human factor. So that also the crisis was brought about by the human failure as well. Nevertheless, we have seen many changes in the regulatory framework, and the discussion continues. It's about the capital adequacy, it's about remunerations, about the structures, about the business models. So the impact of what's going on and of all those regulations will be quite substantial. So I'm really happy that we have these distinguished panelists here today. They represent major institutions with the exposure not only in the Czech Republic but in the region. So let me invite them to brief introductions, a couple of minutes, and as I have said, we would be looking forward to your questions. Maybe we can start with John Hollows from KBC Group with brief remarks, and then we could continue. It depends on you whether you want to stand up, but please keep your introduction relatively short so that we have enough time for questions. Thank you.
So thank you very much, Mr. Tůma, and thank you very much to the association for organizing this event. And let me, on behalf of my group, KBC, wish many happy returns to the Czech Banking Association. Looking to the past, of course, our experience and investment in the Czech Republic has been a highly successful investment. I think it has been highly successful because in the last 12 years the Czech economy has been a very strong economy. Also, we have been blessed with, in our local entity, a very dynamic local Czech leadership and management. Also, I believe that this country has benefited from a very stable banking system during that period, and so we pay tribute to the sound supervision of the Czech National Bank. We also believe that success has been the result of KBC capital and liquidity and human resources and also know-how. So it is quite natural in the current environment that within the Czech Republic we should be concerned about a capital outflow or a liquidity outflow. But we also need to remember in the history of our own investment here in the Czech Republic that there were critical moments when the local entity needed and received the strong backing and support from the parent group. And finally, we believe it is successful experience for us because of our, I don't say unique, but at least very well developed bank insurance model. We do not simply look as a group at Czech Republic as a place where we have a big bank. It is also a place where we have a big insurance company, and that those two entities are working together through bank channels and insurance channels to offer banking products and insurance products and bundled products. Looking to the future, we have recently redefined our strategy with an emphasis on local responsiveness being a key priority, putting our clients first in each market. That may sound very strange to many people, and I think perhaps to the external world quite horrifying that this should be a new idea. But for many banks, especially in Western Europe, the last 4 years have been dominated by capital, liquidity, liquidity and capital, and everything but clients. And so we renew our emphasis on clients, on our core banking and insurance products to retail, SME and corporate clients. And we have redefined our core markets, being Belgium, Czech Republic, Slovakia, Hungary, Bulgaria, with also a strong presence in banking in Ireland. And as part of this emphasis of local responsiveness, for the first time in our group, the Czech Republic is defined as one of our 3 core business units. And so our long-standing and well-beloved chief executive from the Czech Republic, who is also the president of your association, has been invited to join our group executive committee and to stand alongside the other 2 business units, being Belgium and the other international markets, to further develop our business going forward. For our colleagues in the Czech Republic, we believe this represents an opportunity to continue to develop their local franchise. It also signifies our confidence in the local Czech colleagues. And of course, with responsibility and empowerment locally, there comes also accountability for the Czech companies. And in that respect, of course, it is our ambition that the Czech businesses should play a bigger part in the group. And I have to say, we have an appetite on the part of our colleagues from Belgium and from Hungary and from some other places to be expatriated, to experience banking in other centres. And we would like to see that more on the part of our Czech colleagues as well. And also the Czech know-how should become something which is of benefit to our other entities across Europe. And finally, for Europe itself, of course, we have been talking about protecting Czech Republic, but maybe the Czech economy and the Czech banking system and the Czech National Bank have positive messages and contributions to make to the European system and to the European vision. You may detect that I'm neither Belgian nor Czech. I come from the United Kingdom. 20 years ago, the United Kingdom stepped out of the European monetary system and suffered quite a significant devaluation of its currency. And 20 years later, if you open the newspaper today, Angela Merkel is saying to Prime Minister Cameron, "Are you in or out of Europe?" And of course, that's a challenge for every country in the European Union. Are you part of this, or are you out of this? And I wonder in 20 years' time, Mr. Kavanek was speculating what we'll be talking about, those that are left in 20 years' time in this room or in another place. Will Czech Republic be more in Europe and a part of Europe, or what? And I have to say that I sit on the College of Supervisors for the banks and the insurance companies for our own group. The contribution of the Czech colleagues from the Czech National Bank in those meetings, absolutely valuable, outstanding, intelligent, helpful, and we hope that that can continue and even increase, and that that can also be a contribution to the further development of our group. Thank you.
John, thank you very much for your introductory remarks. Now let me ask Gernot Mittendorfer, and I presume that all of you know him. He is at this moment representative of Erste, but he was also the head, the CEO of Česká spořitelna, so that he knows this environment quite well and for a long time. Gernot.
Yeah, and I'm a proof of the stability of the Czech banking system, because not even altogether 9 years in the Czech Republic where I was working here helped to destabilize the banking sector, so it's a really resilient banking sector here. Looking back, basically, and I was a part of the due diligence team in 1999 when we were working on the privatization of Česká spořitelna. And then at the beginning, when we took over the bank had a loan-to-deposit ratio of 50. And the governor was mentioning today that the system is a very liquid system, and it's taking care of that the deposits of the Czech savers are really safe and taken care of. But I remember at the beginning of after the transformation, it was really difficult to find a place for all the liquidity and to deposit in a reasonable way. And from my today's perspective and being in a position as a risk officer, I have to say the Czech Republic and the Czech National Bank is our biggest single exposure, and we are having quite a significant concentration risk that is increasing over time. So on the one hand, it looks pretty favorable and pretty stable from a group perspective. It's growing in relative terms, and I remember meetings with some of the rating agencies, even here locally. They were not happy with this concentration. This will not disappear in the next couple of years because of the current situation we are in. And, but I think in the medium to long term, we should see a more stable and a more balanced development. Concerning the stability and the development of the Czech banking sector, I don't want to repeat what was already said, but I have to say that in our case, the development that Česká spořitelna took was outstanding, and it was actually the biggest and most unexpected success from the beginning. And in addition, this caused some of the problems that we are facing in other countries because we were too relaxed in the approach in other countries, and now we have to make up for the optimism that was created by our Czech colleagues. And the Czech colleagues are actually helping in this. So I don't want to be too long in my introductory remarks. Generally saying, it's a very stable system here. We are very happy about the development. We are proud about our local operations, and we are happy that the colleagues who are working here, or who were working here, take over responsibilities in other countries and on the group level in Vienna.
Thank you very much. Thank you. Now let me turn to Raiffeisen Bank. We have František Ježek here on the board, and let me ask you about your perspective. Raiffeisen Bank is also has the exposure in the whole region extremely strong. So how do you see the situation today and looking forward?
Thank you. Dobrý den. So looking at the region, and I've been having for the last 7 years pleasure to look particularly at the retail credit portfolio across the region, Czech Republic and Slovakia, and to recent point also Poland have outperformed the other countries, and I would say other sub-regions, and this is very good. I think the macro and environmental reasons for that they've been mentioned, but I think I should also give credit to the colleagues, and not only in our bank but in other banks as well. And obviously on the other side of the scale would be probably the countries, and for some of the groups also their entities in countries like Ukraine or Hungary, which kind of cause headache. And there might be other countries as well. I think what I see as a key success factors is that the Czech banking sector did not go on certain drugs. I call it drugs. One of them is foreign currency, and I also think that the macroeconomy helped that actually this growth was kind of not bubbling really. So it went kind of hand in hand, and this is very visible in comparison with other countries. What I learned kind of from since 2008, what is very difficult to manage, and maybe to a certain extent also here, is the long portfolio, the long credit, because the longer it is, the bigger is the complexity, and the more time one needs to work through that, mentioning particularly some of the investment credits and the mortgage book. And it's really nice in comparison with other countries to see that the Czech Republic and the Czech banking sector is performing so well. Maybe a little bit on the topic of the regulation. I think from the group point of view, certain standardization or this initiative of banking union under the wings of ECB makes sense. Obviously, there is a lot of, or many devils in the detail, though from the complexity point of view and the cost of managing the regulatory topics, I think it would be a good step forward. Obviously, there is a number of topics and issues where, from the group point of view, we would like to see a little bit more detail or would have different opinion. I think the idea as such is good. Also from the group point of view, and as was mentioned, we are in the Europe, so we should think about it.
Yeah, may I ask you directly, because you touched that issue, because Raiffeisen Bank is in so many countries, how do you manage the risk? It's managed, obviously it must be managed also at the level of subsidiaries and the group, but with the exposure in so many various countries which differ in many respects regarding the structure of the market, and probably also the business models cannot be the same. How you comply with the management at the level of the group and at the same time at the level of the subsidiaries?
Well, by nature and by background, the Raiffeisen is a decentralized group. Yeah. I think if any function, then the risk management vis-à-vis subsidiaries is the centralized one. We could not say this about business functions, for example. And obviously there is a head office risk organization which is led by the CRO, and basically there is a certain process which one could kind of project on the calendar, and in this we assess actually the individual countries and the subsidiaries, and there is a process of allocation of limits, funds, how you wish to say. And within this framework, which we have, we obviously on the regular run manage, or if comes something urgent, then we obviously adjust as necessary.
Okay, thank you. Thank you very much. And last but not least, of course, let me turn to Francesco Giordano from UniCredit Group, and he's also the chairman of the Supervisory Board, UniCredit Bank, Czech Republic. So let me ask you about your introduction.
Yeah, I think for many of us, it's been quite a difficult period to observe that during the Euro crisis, while on one side the headlines and the newspapers were talking about deepening the integration and making a step forward, the reality looked terribly different. And I think many of us have experienced that the fact that at regulatory level we've seen a slow but rather strong deviation and distancing, where everyone in the Eurozone, outside the Eurozone, in the EU or outside, was taking steps to prevent its own national boundaries banking system. By and large, I think this is a legitimate desire, and something that, of course, we should share, as ultimately is the sovereign power that ensures the stability of the local economy. At the same time, we had the impression that this, if continued, could have brought severe limitation to the ability of running cross-border banking systems. In an area which is economically as integrated as Europe at large, we saw this as rather a terminal danger that could, in the end, really put at risk the economic interaction between the area. So really, we look, as a European, a truly European group, we look with a lot of sympathy and a lot of interest at the proposal to have a more integrated supervision. I say as a very European group because I think one thing that distinguishes UniCredit Group is that given its nature, the national base is weaker than elsewhere. Of course, we are an Italian group by name and by larger size, but of course the presence in Germany, in Austria, in Turkey, of course, in Czech Republic, are so systemic and large that it's quite difficult for us to define Italy and Milan as truly the center of the group. So it's in the interest of us and in the interest of the survival of the idea of having a truly European banking group that these developments go forward. And in this, we have a strong view that some stronger European integration in terms of supervision should go forward. Having said that, I would like to qualify this statement and say that a stronger European supervisory hand, in my view, and I think in our view, does not mean eliminating national boundaries. For a start, it means that also we'll have to get used, as we are, to operate in multiple geographies and in multiple circles. We have very significant presences, for example, in Turkey and in Russia, both of which, of course, contribute and cooperate with Supervisory College of Europe, but of course have very different jurisdiction, legal systems, and supervisory structures. We have a large number of EU entrants, for example, Croatia very shortly, Serbia perhaps a little bit further down the line. And we have significant number of countries that are EU members but not part of the Eurozone and possibly not part of the Eurozone for a relatively long period of time, and then we have the Eurozone. To think that a fits-all system where the supervision can cover in the same way and allow the same freedom of movement of liquidity, capital, and services across these boundaries, I think is frankly not sensible and unlikely to happen. So it is really, to make the introduction short, what we are looking for is a system of rules which, while differentiated by the nature and the political choice of the countries, is orderly, coordinated, and not subject to vagaries of tit-for-tat responses between regulators responding to each other's moves. As far as Czech Republic is concerned, therefore, we see as a legitimate desire the fact that the strong liquidity position is defended. At the same time, Czech Republic exports 85% of its goods to the European Union, and I think has an export to GDP ratio which is one of the highest. It's therefore in the interest of Czech Republic ultimately to be very much part of these systems. And therefore defining rules that allow in a sensible way the interaction and the functioning of the group, I think, is currently paramount. I have to say that these, and I'm referring to regulatory rules, but also to internal rules. Just to conclude, I would like to say that we tend to operate a banking group which is quite federal in nature. So while there are strong directives from the center, there is strong strategic imprint from the center, we also recognize that large banks such as UniCredit Bank in Czech Republic is a systemic operator in the local economy, is important, is a national interest institutions, and therefore needs to fit and respond to the local rules, the local addresses, and the local strategies. In this sense, we have internal rules also which regulate the circulation of liquidity between the group, between Czech Republic and Vienna, between Vienna and Italy. There are self-limitations which are in line with good banking and risk management balances. So I personally would like to conclude by saying, let's trust that good banking can achieve, according to self-determined rules, a good equilibrium. At the same time, our call is not necessarily for a fits-all European situation or for imposing rules to countries that have different political choices, but to have, please, common rules, common setups, clarity of rules, and not overlapping and disorderly approaches that would make the European banking at risk. Thank you.
Thank you. Now we can switch to the questions part of our session, and I'm going to use or misuse my position as a chairman, and I would like to start with one question. John, KBC presented a new strategy at the beginning of October, and you mentioned that it will be focused on the client and that you would preserve your long-term strategy, the universal banking and insurance group. But at the same time, it seems to me, and maybe I'm wrong, that you have changed slightly your business model because you separated more strictly trading activities so that you have three divisions, Belgian, Czech, and international, and then there is a division for trading, if I understand well. Does it mean that it's separated? What's exactly the intention, and does it have any implications for funding, for instance, that there's a strict barrier between retail deposits and funding of those trading activities?
So it is true that in addition to the three geographic business units, we do retain within the center two, or in fact three principal product factories, one being asset management, another being securities business, and finally trading business. These are activities which we still believe, because of the global markets, are global activities where there is a strong benefit to working together, both in terms of new products for clients and also in terms of risk management and supervision. That being said, all the profitability of those activities in each geographic center is recorded in those geographic centers, and also those geographic centers have equally oversight over those entities which are local. So it is true that we still try and follow some things on a global basis, but more in the way of best practice and risk supervision. We have, I suppose, like many banks, thinking about the Liikanen report, reflected upon how much of our assets could be regarded as trading assets. And at a group level, we think the figure at the moment is about 8% of total group assets are trading assets. And so are we subject to a risk from the so-called casino bank? I do not believe so. I would also say that if you look at the core trading activity in our dealing room in Prague or in Brussels, especially on the money markets, this activity is one of the most stable businesses in our group. I did a study recently, and over the last 12 years, there was not 1 month when that activity incurred a loss. And so we think of the casino as being the danger area. It could be a debate where the danger area actually is, but in terms of the, I would call, plain vanilla trading activity done in dealing rooms in our various entities, this business, compared to lending, which has had huge ups and huge downs like all banks, this business is a stable business. And finally is, of course, in support of our client activity, because most of our clients are looking for hedging, for foreign exchange variation and also interest rate variation in the future.
Yeah. Thank you. Perhaps there's one quite major issue regarding the trade-off between financial stability at the national level and time exploiting synergies in the group. And Francesco mentioned it in his remarks. Obviously, the Governor Singer, when he mentioned the reason why should be preserved competencies of national supervisor at the national level, so his argument was quite clear. At the same time, there is a clear motivation at the level of the group to exploit synergies in terms of efficiency and so on. Gernot, how do you perceive this trade-off in these two relevant aspects?
Yeah, I think, and having seen it from both sides, basically, I can say what we've seen here and the approach was very constructive, and I think it tries to balance both interests. What I'm seeing at the moment is a development more in a national direction, and not from this country, but in general, a move backwards in terms of disintegration. And I have an understanding of the motivation behind, because all these discussions about integration and commonalities and whatever, at the end of the day, the question is which taxpayer is getting the bill for what kind of fail and mistake that happened. And I think here locally there's a very strong argument, and the governor was presenting it basically because the problems at the end of the 90s and the clearing of the banking sector basically was done here locally, and the costs were covered here by the taxpayer. So at the moment we see certain tendencies that go against what we've seen in the last couple of years, and I'm not very optimistic that this trend will be reverted very soon, because if you look at all the developments that you can see on the European level and all the summits that we could see, the basic question was never answered, and as long as this basic question is not answered, we will not see very much progress. The only thing we will see is steps in a certain direction, and creating additional burden on us, because the more regulation we get, the more difficult it will turn in terms of systems. So if you look back at the beginning of the years 2000 to 2008-09, I think this was the times of the salespeople, the times of the investment people. The next 10 years, I would see, is the times of the risk managers, IT specialists, and operations managers. And we are in the middle of it.
I will take over that microphone because it seems that my battery is off. Please, it should be the chatting between the audience and our panelists. So let me ask for your questions. Yes.
Good morning. I would like to use the opportunity to ask a question for Mr. Tůma as a member of the Likanen group, because you panelists mentioned mainly, or you touched some impacts because of banking union, but some ideas of which are now discussed within Likanen group. I mean mainly separation of retail banking and investment banking is another impact which might be quite significant, especially for the Czech banking sector. So I would like to ask you for, let's say, the latest news from the group, and maybe to ask other panelists what's their view on such ideas, or at least for the idea of separation of retail and investment banking. Thank you.
Okay, very briefly. Well, it's up to the European Commission now to respond, to accept or reject those proposals. They are principles-based, so that obviously we didn't pretend that we can calibrate how to exactly to put up the threshold for that separation. But there is one important point, that we were aware that there is a tradition of the universal banking in Europe, and that's why we set up, in my opinion, a relatively high threshold which would enable to all banking groups to continue performing all services, including investment banking, hedging, to their clients. We were not sure whether the threshold should be 15, 20 or 25%, so that's why there is the interval. And and that interval should be calibrated in discussion with regulators, with EBA, and with the Basel Committee, and it's up to the Commission. So I don't think that most banks should not be affected significantly by this proposal for separation. It regards really large groups, which more than 100 billion trading assets, and with relatively high share of trading assets to the total assets. So it should be somewhere between 10 or 20 financial groups in Europe. And I don't think that this is so relevant to our region. And it was mentioned already by John Hollow from KBC that the ratio in their case is relatively low compared to what was proposed by the Liikanen group. But maybe that a part of the question was also to our members whether do you think that there is an impact on your business, on the business model, or whether you think that it's relevant for you? Maybe John mentioned already that the ratio is relatively low, so maybe Gernot, what do you think?
Well, we are still analyzing, but we don't think that it will have a major impact. But it will not. The issue is more that we get from various sides different proposals, and the speed of implementation is dramatically increasing. So the problem at the moment that we don't know how the regulatory landscape will look like 5 years from now. And I think I'm hoping that we will have an answer pretty soon, that we can start preparing for it, implement it, and then basically continue doing the business.
Yeah, František, what's your perspective?
I have nothing to add. I think we see it very similarly.
Yeah, and UniCredit?
I think two small remarks. The first one, as you said, I think is important for banks like us to maintain within the limits of the regulation a universal banking model, meaning I think it would be a pity to have a functional separation. If the scope is to avoid that banks become hedge funds, is fully shared, but at the same time I think the services that were mentioned, Forex, basic derivatives, etc., are part of the normal supply of the bank that should be preserved. The other thing is, of course, there was a lot of discussion in market infrastructure also in other areas, for example, EMIR as regard to OTC derivatives and central counterparty, financial transaction tax. Once more, I think it is important that these are in one way coordinated, making sure that they don't all push us in different directions.
I think I've commented on the KBC position, but for me, what keeps me awake at night is trying to identify the European Lehman. And probably, based on what happened in 2008, the European Lehman will be a universal bank which has, in addition, some sort of exotic investment banking as part of its component. If Liikanen means that for 5 or 10 European banks, there is a change, and that we can better identify and rely upon the boring retail corporate banking business, that could also trigger a reopening of the interbank market in Europe, which is desperately needed to improve the liquidity situation of the European banking system. So for me, I don't know if my chief executive would approve of this comment. Thank goodness he's not here, but I think there may be in this report something very valuable if it answers for me that question.
Okay. Another question? Still we have some time before I give break. So let's use this opportunity to have these panels here. No other question. Okay, so that we were slightly in delay, so it seems that we can finish our session at this moment. Pavel, Štěpánek, now it's break, or it's what's the coffee break? Okay, okay.
to all the panelists.